What's going on, La Familia? Welcome back to another video, guys. Listen, you know how we do this. We're going over the trade setup of the week, right? Trade setup of the week. What was the best trade that we took this week so far? Not gonna lie, the markets were a little crazy this week. Had a lot of news towards the end of the week, which violated the markets, but we had a specific setup that I want to go over that was beautiful. All right, beautiful. So right now we're looking at GPJPY, and this is early on in our morning session. We caught a nice push on GPJPY. We actually caught around 40 to 50 pips on this move, but it ended up swinging for around 70 pips. All right, of course our last TP was around 50 pips. But let's go ahead and break down the confirmations and the mindset that we had in order to get into this particular trade. All right, so let's go. I want to go back to exactly, we usually start trading around 7 a.m. Let's go to that 7 a.m. candle. Let's go over the confirmation that we saw, which allowed us to actually get into that trade. So, all right, so let's first go to our 4 hour, with our higher time frame. What first thing that we see? We see a inverted head and shoulders forming on our 4 hour, right? We all know exactly what that means. If you don't know what it means, inverted head and shoulders basically means that you have a bullish continuation on the way. Look for the retest of the neckline, enter on the retest, right? So that's basically a bullish confirmation. Now, we're going to see a nice push, in the upwards direction, right? So we have that first confirmation, right? Now we're gonna start marking our key levels. So we already have in our mind, like, it's a possibility that price can go up. All right. If we look at our key levels, we have price, rejecting our previous demand zone here. We have a nice supply area. Up here we have a lot of rejection. So that's kind of box up the market. All right, cool. Like I said, we got some price rejecting the supply zone and this demand zone here. So really, we want to see a nice break of structure of the supply for us to get into a nice entry. All right, go to our lower time frames and see what do we see. So this is 7 a.m. All right, that's 6. Let's go to 7 a.m. candle. All right, we have a 7 a.m. candle. Right now, we see price kind of consolidating, but we actually have higher highs and higher lows that are being formed. We go to our 4 hour look. We see higher highs, new highs formed, new higher low. Right now we're looking for a price to break this supply area. Now let's go over what was the confirmation, what was the final confirmation, what was that entry that let us know that, okay, price ready for us to actually get into the trade. We were a little patient on this trade, but I'm gonna show you exactly what we saw. So this is the first confirmation here. This is around 8 a.m. All right, what do we see here? We actually see a nice indecision candle that's forming. All right, we had first price tried to poke through that supply zone, couldn't reject it, but now we actually have price giving us this rejection candle here. And what exactly is it rejecting? God, it's actually rejecting this zone here. This is actually basically a small break in a retest. It's actually rejecting our 1 hour order block, making a new demand zone. We look at our 30 on lower time frame, we actually have price rejecting our 1 hour order block as well as our 30-minute order block. These candles tell stories, guys. Not only the candles, but the wicks, they tell stories as well. So you see the indecision candles here, followed by the wick rejection, letting us know that price is getting ready to push in the opposite direction. I feel like I think it was this very next candle, which was the one that let us know that, okay, it's time to get into this trade. All right, look at the next 1 hour candle. Okay, now we see the first engulfing candle. We have a bullish engulfing candle, and we had a lot of rejection. Oh, I did that too fast. We have a lot of rejection on the 1 hour of the 1 hour demand zone right here. So really, you could have gotten to the trade right after this candlestick close here. So this is actually after the 1 hour this candlestick closed. So once this candlestick open here, after the rejection, we could have got in for an entry. All right, now on the 1 hour, but let's look at the 30-minute. This is a sign here. This is our key level. Once we saw price was rejecting off these key levels, we actually could have entered right here, or right after we got this push happen here. That would have been our entry. Why? Because guess what? We actually made a new key level. We have major rejection off this new demand zone. Our stop losses go right below our low. All right, and we're gonna go over targets in a second, but this is where our stop goes. Matter of fact, let's go ahead and put our buy position. I think we actually got into this trade at 10 a.m. So it's actually right around here. Got into this trade, but let's see. Buy position. So you got it here. Right here, stops go right below the low. If you'd have got in over here, you had a super tight stop loss. But we actually got in a little bit later. But we wanted our stop loss to be below the low, below our previous demand zone. All right, and then our targets. Look for our targets. We go to our 1 hour. Zoom out a little bit. How do we mark our targets? All right, I like to trade from zone to zone. I find levels of structure to the left, and I find a key level. All right, so this would have been our first target here. Why? Because look, we have a key level here, previous demand, previous supply zone. So as price is going up, we're gonna see either rejection of that area or price is gonna break through. So our first, even though it's a small TP, first TP is gonna be here. Then we go to our next zone, our next level of structure. This is actually a nice little order block here. So we're gonna put our TP2. Really, this would have been our TP1. Right here. Then our next target would have been level of structure right above that. So we could have put one right there. Right here. Let's go ahead and zone it up real quick. All right, that's TP1 actually here. TP2 around 50 pips. All right, now let's watch and see how price reacts to this level. As I said, we got to the trade here, executed on a buy market execution. Watch this very next candle. We got price shooting up. All right, price shooting up. Now, another thing I want to talk about, another thing you can use to to correlate this, guys. You want to look at the currency that are actually in that pair. So if you look at GBP JPY, if we actually look at the yen, 9 times out of 10, the yen should be doing the opposite of what GBP JPY is doing, and vice versa. Basically, GBP JPY should be doing the same thing as the actual pound, right? And I won't have time to actually go into that, but go to use a DXY, not DXY, but WCU, the World Currency Unit, of that particular pair. You can mark up charts too. But let's finish going over this. All right, first candlestick. We're already in profit, 15 pips. Straight in profit, right? We already would have smacked our, if we would have had this TP1 here. But our TP1 was actually, we like to get 30 pips on the first TP. All right, go to the very next candlestick. Boom. TP2 smack, or TP1, smack. All right, we had no drawdown. No drawdown at all. Had a nice pullback. This is a great time to get into another entry. But most people would be like, oh, it's coming back. No, it actually found. This is why these levels are important. It actually found new structure. It found a base. All right? We know price moves in impulses and corrections. All we did had an impulse. Price corrected itself. Tested the previous low. Previous level of supply as a new demand. Watch this. Nice continuation. Straight through our TP2 or TP3 in this case. How many pips did we secure? 53 pips. Guys, you do a standard lot, 1.0, $10 a pip, that's $500. Actually, almost $600 in just a few hours. Actually, let's see how many hours was that? That was in 4 hours, $500. All right, you do $100 a pip, it's 5 bands. So those are some of the key levels, and also we actually had rejection off of this level of demand zone, demand too. So we actually could have had either our stops below this low, or if you want to have a wider one, have your stops below this demand zone here. So these are some of the confirmation that we had for GPJPY. We call it a nice, beautiful move. I think it went up a little bit higher than that. But you see how, look how price reacts to these key levels. All right, look how price reacts to these key levels. This is why it's important that we trade from zone to zone. Stack your confirmation, stack your confluences. Once you get confirmation, execute on the trade. Make sure you're using proper risk management, because guess what? At the end of the day, we're making high percentage. I won't say guesses, but what's the word I'm looking for? I don't know. For lack of a better word, I'm gonna say guess for what we're looking for. High percentage moves in the market. All right, we're not guessing. This is not gambling. This is a strict system of stacking confluences and confirmations to understand where the market is actually going. All right, and when you use proper risk management, and you focus on consistency, you'll see it in your trading and also in your bank account. So appreciate everybody for tuning in to this week's setup. We got a lot of value coming, a lot of information coming. Listen, stay blessed, stay positive, and I'm gonna see y'all on the next video.